Today we are going to focus mainly on the time frame combinations. You should be aware of those combinations. They are on my first person or factory, and these combinations, these time frame combination, multiple time frame analysis are key to what you are going to do or what type of setup you are going to take. It all depends, obviously, on what kind of trader you are. If you are a position trader, a swing trader, intra-swing trader, intraday scalper, you have to choose before anything. You have to choose what you are going to do as a trader, what you want to be as a trader, because that will define which time frames you are going to use, and you will have to stick to those time frames, because jumping around, switching back and forth from the 4-hour to the 30-minute to the 5-minute to the monthly to the weekly, that will add a lot of confusion to your brain. And even though you think that you are a Superman or a Superwoman, you are not, because your brain is limited as well as it is mine. So mine is got just have a neuron left. So with that, I have to trade, to eat, to run, to dance, and all of that. Women have a few more. That's why they think too much. Sorry, it's a joke. But the thing, mine was Mark is saying that he soon found out mine his was limited. Yes. So the thing is, you have to know. First of all, you have to decide which type of trader you are. And even though this sounds silly or very simplistic approach, it is very, very important to how successful you're going to be. Because if you are switching from time frames to time frames and deciding, now we'll take a look at 1 hour now, at the 50-minute now, I will pay attention to the daily and now to the weekly. If you do that, you have to have rules. So if you don't have the rules, then you have to stick to a simple combination and always do the same thing, because the probabilities will be on your side many times. Not always, because this is a numbers game, but many times, more times than they are not. So first of all, we have to decide which time frame combination we are going to do. Okay, so now let's start with a trade I missed. I posted on the thread or on the Trader forum, and some people saw it. I missed it by, maybe the spread. Okay, I should have painted it. I drew it down. The level I drew it down, I should have been like that. I have good entry on this trade. This is an exotic pair. I don't trade it very much, but when I see that I look at the dailies like this, and when I see levels like this, really strong imbalances that took out all these areas of demand, then I will say to myself, I'm going to trade this exotic pair if price reaches one of these areas. Okay, so this is what I do with the exotic pairs. So this one was a very clear example of how to take this kind of trade. So yeah, I will try. Jack, he wants me to spend more time on daily 1 hour combo, but the thing is, it's the same thing, Jack. Daily 1 hour, weekly 4 hour, monthly. These are the combinations: daily, monthly, weekly 4 hour, daily 1 hour. We have 5 time frames, and you have to decide which one you want to go. Many times, the daily 1 hour will be against the weekly 4 hour and against the monthly daily. That will be because the monthly will probably be in a downtrend, and while price is pulling back to an area to short, the lower time frames, the lower combos will be in an uptrend. It will be a bigger correction than normal, and then price will probably keep on dropping in the direction of the higher time frames curve. So price is fractal. That's why, Jack, I'm telling you this from the beginning, you have to decide which one combo you want to use and stick to it. And the thing is, which type of trader you are, how much free time you want to have for yourself. This looks like psychological and like useless things, what I'm saying. That you have read a lot about psychology and all that. But remember that being successful in trading is all about controlling your emotions and about having a plan and following that plan. And the most important thing is not the rules that you have, but that you execute the rules. And in order to do that, you have to have a very strict plan, and that includes which type of trader you are, because you can't be a scalper today and then on Tuesday you will be a swing trader, and then after 2 weeks you will be doing position trading and then scalping. That will be a lot for your mind. So if you want to have any time to fulfill your passions and do whatever you like, stay with your girlfriend or wife or husband or doing the sports that you like, and have some time for yourself, you have to decide that, and from that start to move forward. You understand what I mean, Jack? Well, everybody, here, listen to me. This is very, very important. It looks like a silly thing, but this is the most important thing in trading. You have to decide first what you want. And once you decide what you want, then you have to take all the necessary steps to execute the plan to arrive to your destination. Even though you know it will take a lot of time, it will be very hard, but if you want to become a profitable trader and consistently earning money every month, you have to do that. So now let's start with Mark Tivey says yes, it sounds very logical. So what I'm saying here on the Forex Factory Australia and the private forum I opened recently is everything the same after all. So let's start with this. Let's start with the higher time frame, the biggest time frame that we have on MetaTrader. On other platforms, maybe we'll have 6 months, 1 year. That will be for longer term curves and all that. So if we have these combinations, monthly, daily, weekly, 4 hour, and daily 1 hour, I'm gonna stick with the monthly. Let's start with monthly. I don't have much history now, okay? On this is an exotic term. I probably doesn't have much history. Well, if you look at this would be like a monthly demand area. So we are really high in the curve. Do we agree that we are high in the curve in the monthly? And we are in an uptrend. We are in an uptrend. Just taking into account these little candles, small 2 candles. So we are in an uptrend. We are making higher highs, etc., etc. This is a continuation pattern, CP pattern, demand of demand. And look at this. This is a drop base and a rally, a base and a rally. You just have like 10 candles, but that's enough to tell us that we have this with this little history. So we have the monthly is in an uptrend. So since we have the monthly in an uptrend, what can we do on our end time frame? Because we do have 2 time frames to choose from. One for the curve, how high or how low we are in the curve. This is the monthly for position trading, and then we have our execution trade, our execution time frame, which is the daily. We do need at least 2 time frames for our top line analysis. That's compulsory. That's you have to. You just can't make a decision on which direction you want to trade just with one chart. That would be very, very difficult for you to become profitable doing just that. Maybe you can, okay? So the thing, yeah, Hugh is saying I was talking about the intermediate time frame. This is optional. I will tell you this, okay? Because I've changed the first post a little bit to make it even easier. Hugh, you should read it, okay? So we have one combo, monthly and daily. So the monthly will tell us the direction of my bigger picture and how high or how low I am in the curve. So which is my bigger picture direction right now on the monthly? It is in an uptrend or is this in a downtrend? These are the same questions over and over, same thing. So we are in an uptrend or we are in a downtrend? We are up, okay? Up. So now I have to look for on a daily time frame. These questions look like very banal and very simplistic, but it is the question that you have to ask your brain every single time and stick to those answers. Okay? So we are in an uptrend. So we're in a monthly, and on the daily, this is our execution time frame. What are we allowed to do on the daily? To buy on demand areas. The closest to our bigger time frame demand area, the better. So we have to go long. So what happened here? Let me show you. Here. More or less. There. We rallied like crazy. Look at this. This is a draw, a base and a valley, okay, and created this demand area on the daily right here, which is a retest of this one, and look at imbalance, right, like crazy, rocketed. So this is a nice level, okay, a nice level. This is not fresh, this is not original, but there's a big imbalance there. So the thing is, price reached that area. We were allowed to buy on the dailies. This we have to wait for confirmation because this level was not original. So this was in the lower time frames. Maybe there was an entry there, or we will look at it. So the thing is, if we are in the monthly, we are up. Look at this. This is monthly, really, on this daily time frame. We are up. We are allowed to buy on areas that look good on the way that we score the levels. So this is a big imbalance, little time in the area. This is an area where price rallied. But we are allowed to buy near the daily areas at the monthly demand areas because we are our time frame that tell us how high or how low or what direction we have in the bigger picture is the monthly. So if we do what the bigger picture tells us to do, we will have higher probabilities of doing that, of being successful. Yeah, we would have lost this level, yes. I mean, we have missed this level because it was so strong. And this level I was needing for confirmation on the daily, or I would be needing for confirmation on the daily, unless there was a great level of demand here on the 4 hour, fresh and original, and that we will see now if that happened or not. Okay? It was used up, but we have to see that where did price rally there. Look at this. It was an area of demand on the monthly. It was used up, but then we have to see what happens down here. Look at this pink candle. This is a big imbalance there. So the thing is, the monthly is up, price is now bouncing, retracing into our area of demand of the monthly, bigger picture, so we are only allowed to buy. So this is the reaction to that area. Where there are some nice levels of demand on the lower time frames, we don't know now. I'm just trying to go step by step so that you know which are the combos and how each time frame will affect the decisions that you have to take. Okay? Is that understood? Clear so far? So the bigger picture, right now, we are concentrating on the daily and the monthly. So the bigger picture, and my bigger picture direction is the monthly. So there are 2 types or 3 types of trade for me. Okay? And this is pretty simple, pretty straightforward. One trade is a momentum trade. A momentum trade means that the time frame that tells us the direction that the price is leading towards or it's coming from is in a trend. So the monthly is in an uptrend. So if we take trades on the daily imbalances, on the daily impulsions, that will be momentum. With that, I mean that when we have this monthly uptrend here, okay, we have this rally base and a rally. You see, rally base and a rally. This is a CP, continuation pattern, no entry. Rally base and a rally, confirmation pattern, entry. Drop base rally, and this is a rally base and a rally, another confirmation pattern. This is another entry. Okay, this should be a confirmation because this is already used, not used up, but it's not fresh. Okay. So, as you can see, the impulses are to the upside because the monthly is taking control now of the trend, of the bigger picture. So, if the monthly is telling us that we are up, we have to trade all daily areas of demand. At the start of the move, yes, here, rally-based rallies, the continuation pattern, CPs, what are called CP, okay? So, if we start with the move and we start seeing rally-based rallies, what does that mean to you? What is the most logical thing that could mean to you? Because I'm just trying to be logical with you. Go long. That's all. I mean, that means a strong imbalance. Price, the sellers And the bears do not have the power to make price to return to the mean. And even because of that, price is rallying and rallying and rallying. The big boys, big institutions are injecting money into the markets. And price does not, sellers are not strong enough to balance that equation. Big demand. Is that understood? It's pretty simple. I mean, there's nothing complex about it. This is very logical. It looks like so logical that it is unrealistic. You know what I mean? It is so simple. You don't need any indicators, any MACD, RFI, CCI, Bollinger Band, and whatever you want. You don't need that. I mean, you know that you are in an uptrend, and the combination monthly dailies, the big institutions are looking at these time frames because they are managing their positions on the longer time frame, 3 months, 6 months, depending on what the Q2, the Q1, the Q3, the Q4 are doing well. If it is doing well on the States, on the Europe, and all that, so they are managing that on the bigger time frame. So if you go with them, then you will have higher probabilities of being successful. Don't you think so? We are talking about probabilities. We're not talking about certainties. This is all a game's number. So if you have very strict rules and, even more important, very simple rules, then you will not have any fear of pulling the trigger. But the more rules that you have, the more time frames you look at, the more indicators you have, the more rules that you have to add in order to incorporate those indicators or those nuances of your strategy into the whole decision process, the pulling the trigger process. Okay? So I will continue now, Tarun. I will answer to that because we hit the daily and all that. Because I'm now talking about the bigger picture and our end time frame. And now we will talk about the three different. We'll assess if that is logical to you or it is not logical to you. You don't have to agree with me. I'm just trying to put forward what I see, what I've tested, and what I'm doing every day. And then you will have to decide if Alfonso is saying something that suits your mind, or it is logical to you, commonsensical to you, or it is just a piece of nothing. I mean, for not saying something even harder. So this is the way it is. So we have the monthly in an uptrend. We are making higher highs. We've got a CP, continuation pattern, the strongest. This is the second strongest look for a demand area. The first strongest look is a rally, the base, and a rally with a gap. There is no gap. So this is the strongest is a rally base and a rally with a gap. The second strongest is a rally with a base and a gap. And the third strongest is a drop, a base, and a rally. So the drop base rallies, the V shapes, and the inverted V shapes are good for the extremes. And the CPs are good at the beginning of the movements and not that good when we are reaching the extreme of the curve, of the bigger picture. I will repeat it a few times now here. It will be recorded, so you will be able to listen to it over and over if you don't get tired of my sexy voice. Because I know I have a sexy voice. You men do not appreciate it, but women do. It's true, believe me. So let's continue. So I'm just trying to make a little fun out of it because this is very technical and sometimes adding some laughs is good. Yeah, I'm not French. I don't sound like French. I can speak French as well, but I'm not French. Sorry. So let's continue because this is key in understanding the whole process of supply and demand, which governs the markets, any markets. So now that we know that our bigger picture, and I repeat, this is fractal. You just have to decide which kind of trader you are. Imagine that you are going on holidays to Kauai. A friend of mine has invited me to go there, Leo. Remember that? So you are planning a trip and you're going to stay away for 2 days. No, let's say 1 week or 2 weeks. And you are an independent trader. You are trading, and you're living as a trader. Which type of trading would you do while you are on holidays for 2 weeks in Hawaii, Bali, Australia, wherever you are? Which type of combo? Some say known, swing, position, swing or position. That's it. I mean, I know I'm going to stay away for quite some time. And which type of trade I'm going to trust or to lean on? I'm going to trade levels, really, really big levels of imbalance. It doesn't take. I don't care if it is counter trend or not counter trend, because this trade here is a counter trend. Okay, right now. But the level of imbalance was really nice. I will explain to you how to get why the decision of planning a trade there, even though I have missed it. People know that I've missed it. Those that are in the forum know that I missed it by 2 pips. And the thing is, you will be away, and you want to have a way of managing your trades and not looking at the monitor like a zombie every morning when you are on holidays. So because your wife will cut your, you know what, okay? And she will want to spend time with you, and you have to rest, and you want to have your holidays and enjoy some trekking or diving, whatever you like, okay? Even though if you want to be in the swimming pool all day long with mojitos and caipirinhas, that's okay. But your free time, you decide what you want to do. You don't want to pay attention to the levels, to the supply and demand levels, or how the market is going, because the more that you look at the screen, the more decisions that you will that you will close in your mind, and the more trades that you will close because your fear will pop in. Okay. So Hugh is asking, yellow dotted line is this is the weekly. Okay, this is the color code that we are using with the indicator. This is the weekly, and this is the monthly. Okay. So if you look at the weekly, see, this is weekly. So we have a daily level of supply. We have a level on top of level. But this one caused a great imbalance and took out this area of demand. So that validated this level as an entry. That's the rule. If this level of supply wouldn't have taken up this previous level of demand, this wouldn't be a viable area of supply, because it wouldn't be a supply area, first of all, because it didn't take the previous one. Well, we can say that it took out this one. Okay? Yeah, it will be validated. Sorry. It took out this one because this one is a valid level of demand because it took out this area. Made a high. But then it bumped into this supply area on the daily. Okay? So the thing is, let's go back on track. We have bigger picture the monthly, and the daily we are allowed to buy on all levels of demand. If it is not fresh, then we have to wait for confirmation. So we have a 2 time frames combo. Monthly bigger picture, first time frame, the upper time frame bigger picture, and bigger picture direction. The daily, the intermediate time frame, will be the place where we locate our entry levels of supply and demand. Is that understood? My bigger picture is the direction, the curve, how high or how low, how overbought, how extended I am, or how oversold I am. Okay, that's the monthly. And then the daily is the time frame where I will draw the levels. I was scared because I thought it was not recording. Oh, damn it. I am recording. Oops, sorry. It's a relief. The thing is, so we have to pay attention to our daily levels. You will draw the levels on your every time frame. You will not draw the levels on any other time frame. Is that clear or not? That's a rule. You can't. And when I mean can't, that's uppercase, big, uppercase. You can't draw levels on lower than daily time frame, on a lower line than the daily, when you are using the monthly and daily combination. Okay? There are several ways of doing this. Actually, you're saying I will tell you later. But right now, the most simplistic way of doing this is monthly bigger picture, how high or how low I am in the curve. And this dictates what do I gonna do? So here we were when price rises from this CP area and then retrace into this area of the monthly, what was I allowed to do? Was I allowed to buy to sell here? Look at this. This is the monthly. Am I allowed to sell on this continuation pattern when price has yet hit a fresh area of demand, CP demand area on the monthly? Are we allowed? We are not allowed to sell here. If you sell here, most of the time you will see this. That's as simple as that. Because we are too low in the curve. And that is, the curve is being, the monthly is telling you how high or how low you are in the curve. So this trade would be negated even though you see that there has been a 2,000 pips drop, which is not 2,000, it's like 200 because this is pip value on this stock pair is like $2 or something like that. Okay? So this area is not a good area to short, even though it broke out and all that, because look at where price were reacting to this daily area of demand. So I don't want to sell. Look at the imbalance over here. Where did price stop first time? This is 1, 2, 3. Oh, it's like a 3-4 extended range candle. This is not an extended range candle, but look at this imbalance. This is crazy. So what did price did first time? It did stop the first time, stop around here. Okay, and then it started to consolidate over here. What has price done now? Okay, it hit this area of demand, and now has price stopped now? At the area where previously there is a resistance area, and we have a fresh area of demand, or supply, sorry. You see the process. History is repeating itself. Q asking, do you pay attention to the violation of the daily back trend line with conviction, only full candle? Yes, I do pay attention to that. If this area is fully violated with a full candle above, then I will start thinking about, this is not a good idea to short. But the thing is that I will tell you now, this is another kind of trade. If that happens, we have the location type of trade. So right now we are on the momentum type of trade. You understand the difference between a momentum type of trade and a location type of trade is that the momentum type of trade needs direction from your higher time frame, the curve. And the location type of trade just needs a great imbalance on the opposing supply and demand areas of the big picture. So if we assess, imagine that this is, I don't have history, but so let's imagine, okay, that this area is supply on the dollar NOT. I don't know because I don't know if we have history on another broker. Maybe we will have. I don't have broker history for this on my broker for this. Okay, so let's assume. Okay, let's assume that we have this market supply. This is the highest high in history. I don't know. Maybe it is. I don't know. So this is where has price arrived. It has arrived now. It is bouncing from this area and it is dropping from there. So now we are trapped between this one. This CP pattern is right in between the opposing supply area and the monthly, and this one is the extreme. This one is the one controlling price, demanding control, and this one is supply and control. This one is not demanding control. Temporarily, the demanding control is calculated on the extremes, on the V-shaped and the inverted V-shapes. The CP patterns, which are the continuation patterns, are just momentum type of control. Momentarily, it's controlling the market. The extremes are the ones that you use to calculate the curve. Okay? But you can use this one as well. Okay? Temporarily. But if we look at this, we'll do this. Look at where price was. Look at this retracement. Price rallied from the bottom to the top. And just by looking at this chart, the center of this whole imbalance is right here, at the proximal line of this monthly demand area, monthly continuation pattern. So the thing is, if we divide the screen in 3 sections, this is the higher high, okay, This is 50%, which we have calculated right now using the Fibonacci tool. And this is 0%. So 50%, 0%, 100%. So what am I allowed to do when I am 100% up in the curve? Selling or buying? Everybody's saying selling, selling, selling. So why do you many times buy when you are there? That's my question. Why do you buy when you are in such a big place? Many times you do buy there because you are not aware of the supply and demand imbalances, of how that controls the market. And sometimes you should make silly mistakes, like Steve said, and you make silly mistakes, and you still think that that trade is going to work. And then you will, okay, I will take a risk. But then, if you are doing that, you are not following your plan. In fact, you are breaking your plan. You're breaking the rules. And you shouldn't break the rules, because that's why you have the plan. Okay? You understood that? So, the inverted V's and the U-shapes, inverted U-shapes, or V-shape, whatever you want, the U-shapes, I mean, is when there is some kind of consolidation, then there's a drop, a base, or a few candles, and then on the right, that's a U-shape, and there's a V-shape, which is even stronger. Okay? So this is demand and control. We use the extremes for calculating the demand and supply and control. And here, in the middle, price can go anywhere. Diddle in the middle. Okay? No diddle in the middle. Price can go anywhere, unless you have a really great level there. If you have a great level, a great imbalance in that area, then go for it. If not, when you are in the middle, do nothing. Because who is in control? When we are right here at 584.33, which area is in control? Anybody tell me? Yeah. It is this is what we call balance. Supply and demand is imbalance. Not imbalance, I mean, it's in space balance. So if there is no way of knowing where it's going to go, what should you do? You just wait or switch to another pair and then wait for a nice setup. So you have to have your rules. This is a very simplistic approach. So have your rules, and once you have the rules, execute them like a robot. So up here, up there, okay, we have reached this area, and look what happened over here. Okay, let's analyze. I repeat, this is a monthly, daily approach, prices fractal. Now we will look at the weekly 4 hour and then the daily 1 hour. Okay, maybe I will stick the whole trading session with this pair, because this is so important. So we are not here looking for trade setups. We are here. You can do that during the weekend. Now today is Friday afternoon, and I do not open any trades during these session markets, because, well, if I'm holding some trades, it's okay. But adding new position now to my equity, to my accounts, is not a good idea, because funding gaps can be huge, and stop loss are not respected at all by your broker. So you can plan the trades during the weekend where the market is closed, and then on Monday morning you will place the pending orders. That's the way I do. So you can do whatever you want, of course. But the thing is, let's focus on this, and then if we have time, we will look at other pairs to see the same thing repeating itself over and over again, because it's the same thing. Supply and demand is what it is. You are going to change it, and nobody's going to change it. It is all about fear, greed, and human emotions, and that's not going to change unless we are conquered by robots. I don't think that will happen during my lifetime. Hopefully. So the thing is, now that we know where we are, we have to decide what we want to do. We wanted to buy. So now we reach this area, and look at this. Let's read price. This is just reading price. Ride like a rocket. Create a small area of demand over here. Look at this imbalance. It's not good. Is this imbalance as good as this one? Let me use these candlesticks Otherwise, it's very difficult for me to move around. Okay. So look at this. So now look at this. This is an area of demand right here, right there, because it made a higher high, etc., etc., etc. And then it reacted to something here on the left. I don't know if it's history or not. I just don't know. If I knew there was a monthly area there, it would possibly be. I don't know. Okay, so I can make a decision because of that. So look at this. What is the departure? How good is compared this departure to this departure? Is this better than this one, or is this one better than this one? Just look at that. This one is weaker, and this one is stronger. But I will tell you the truth. I mean, I don't know where there is inside here. I would have, if I was on the monthly daily time frame, I would have buy here. I would have had a loss. Because for me, even though the imbalance is not great, we are close above, etc., 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 and this is what happens most of the time. Look at this. Rally-based rally, rally-based rally. Then it hits. Then we have an entry here. So this is what happens most of the time. So I would have bought here if I was trading this pair. Even though the imbalance is not that great, this, of course, not here. I don't draw a level with two dojis. Either one doji and other candles in the area, then I will. This would probably be a reaction to a higher time frame area. But since we don't have a higher time frame or history on our brokers, then I can't make a decision that would prevent me from taking this trade. So this trade would have been a valid trade. Another thing is that you don't want to trade the whole level and you want to wait for some kind of confirmation there. So if you did that, probably you wouldn't have had a loss. Then you would have to be in front of the computer. Unless you don't want, you are obsessed with this, and then you are a ludopath. I don't know if that is said on someone who is loves game, and then you loves games, the game's number, and casinos and all that. You want to do that all the time. It's not my case. So that level of demand would have been a valid level of demand, but a loss. But we don't care about that. It's a loss. Okay? Let me read you. What about weekly supply? Is that not a reason to stand up? Okay. But Hugh, about this weekly supply. But one thing. Let me show you this. I mean, I can't even go further on that. So further back. This was not. Is this a weekly supply or not? This was now. I mean, because I think you are looking at this in the wrong way, I think. Here. Now we know that it is a weekly supply, but at the time, the weekly supply was not formed until price dropped like this. But at the time, we didn't have any of these candles. There was no weekly supply here. Understand what I mean? This has happened already. So we don't have any weekly supply. Unless this price is a reaction to a previous area here on the left, but we don't know that because I don't have history. Maybe it will, maybe not. If there was no area of supply there, and I see this level, I'm going to go long here. If this was the 1 hour area, 1 hour time frame, and we are bouncing from the daily over here, which is the same price factor, I would have buy here. I mean, that's all. I don't need to know anything else. This is all a game's number, so you decide. Okay? Is that understood? Yeah. Okay, no problem. So the thing is that. So we are on the monthly, we are really high. I mean, we just can't. What we can do here, the only thing we can do here is take a look at the monthly. And when we are up there, is this, look at just at the chart. Since we don't have history, then the curve is analyzed by just looking at the visible candle patterns in the chart. So is this price high or low in the chart curve? High or low? Super high. Extremely high. So if I buy here where the daily was, okay, let me see where the daily was. Let me draw a horizontal line and then we will all know where that daily was. Let me delete the extremes lines so they are not mixed. 50% was there. Okay. So the area of demand on a daily is this one. Let's make it wider. And make it white, for example, and make it like this. Right there. Okay? So, look at the monthly. Since we don't have history, okay, is this a higher probability long trade? Yes or not? Pretty simple question. Everybody's saying no, 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 no. Peter's saying yes. No, no, no. I mean, by looking at this chart on the monthly, which is the bigger picture, it doesn't look like a good trade because it's too high. We are trying to buy after a big rally in price, and that's the biggest mistake that many of us would do. But if you are not doing that and you're just paying attention to the levels, the imbalances, you are allowed to buy here as per the rules because you don't have history. But logic tells you that if you do that, you are not playing, you don't have the odds on your side. Okay? He was asking, why do you need confirmation on that long on daily time frame? You can do, I mean, many traders are not prepared to set and forget here. So you can say, okay, I trust this level, but I will wait for brand new levels of demand being formed here in a lower time frame, which we will cover now in a while. Okay? You can decide. I mean, many people won't be scared of setting and forgetting because they think that the price is going to blow out the levels. Many times they do. So they are not prepared to accept those losses. So they prefer to wait in the spring, waiting for some kind of confirmation. And confirmation really is not the right word because there is no confirmation. The market will not confirm, hey, Alfonso, you can now buy. No, I mean, you have now an opportunity with some more odds for you to have success on that trade. That's all you have. There's no confirmation for anything. Okay? I wish I had confirmation for all the trades that I take. So I will wait always for confirmation, not set and forget at all. So it would be like comfort. Yeah, like Hugh said. No confirmation, because there is no confirmation at all. The thing is, now that we know that, now that will be too high, you can say, I will wait for some kind of confirmation. Okay? So we'll wait for brand new levels, or I will wait for a pink candle, whatever you want to use. I'm not using any of that. Okay? I will be using brand new levels of demand that confirm or prove, not confirm, it proves me that there are willing buyers in the area. Maybe that willing buyers new area will be temporary and it will be taken out with an impulse to the downside. But well, I just need that. So if I'm waiting for that, like in this reaction down here, okay, I will wait for some kind of new areas, new buyers in the zone. Okay, so here it is. Look at this. We have this level, no pullback. The continuation pattern, no pullback. Another level, no pullback. And this one is another level, and this one was a loss. Okay? Oh, sorry, not a loss. It was a break-even. Look at this. This is the way it works. Look at this. Rally, base, rally, base, rally, base, rally. What that does mean to you? Can you tell me? Not even a V shape, not even a reversion to the mean. That means buying power or selling power. This is pretty basic. Buy. So if you hit a monthly demand area and you see only confirmation patterns, continuation patterns, rally base, rally base, rally base, rally base, rally base, rally base. Come on. Am I going to wait for this area of imbalance? Of course this is a great imbalance. Okay, but will price retrace to that area in the short term? I don't think it will. It's pretty strong. It's good for set and forget, but not now. Maybe days later, weeks later, or months later. Like this one here. This happened the 9th of September. And after 1 month, price has reached. So if I am here, like a zombie, waiting for this price to hit this area, what am I doing? I'm wasting my time. Because that is not going to happen at present time. It's going to happen later, yesterday. You see the logic? So, if I have hit a fresh area of demand on the monthly, my time frame, my curve, price is probably going to react. If we start seeing all this, this is buy time. Buy time. You just can't do anything. I mean, if you want to sell here, you are lost. Most of the time, this won't work. And look at how much trading in the area on the 4 hours. 6 candles is our limit, so this is too much. So this is absorbed easily. Then we create this one, no pullback, this one, a pullback. And we would have a break-even. So the entry was down here. And look what we have down here on the 4 hour. Let's see what we have. Look at this. Beautiful. I haven't looked at it. So this is the way it works. The whole strategy in a nutshell in one single sample. I didn't know that. So look, what happened here. Now we will add the third time frame. Okay? So far we have 2 time frames. We have the bigger picture, which is the monthly in our case. Okay? Bigger picture for position trading. Then we have, and there we assess how high or how low we are in the curve. And we decided that, we didn't decide anything. We were aware that that area was a big imbalance because price is telling us. Just look at it. Price is telling us that that area is going to be imbalanced, so we have to buy. We now locate a really great imbalance. We look for areas of demand to buy. Don't we have to do that? That's the process. Which is my bigger picture, monthly? Which is the trend in my monthly? Up. What am I allowed to do? On my entry time frame, on the daily, buy. Those are the questions that you have to ask yourself, always. Even though you are trading the monthly, daily combo, weekly 4-hour combo, or daily 1-hour combo. That's fractal. Price is fractal. So now, we have the monthly curve as our bigger picture time frame, the upper chart, the upper time frame, higher time frame. Then we have the daily as our entry. So let's look for areas of demand. Price is dropping like a rock over here. This is not a daily area at all. Why it is not a daily area at all? Look at so many candles in the area. Look at this. This is 18 candles. That means almost 3 weeks. Price has been there 3 weeks. So that is not a good level on our entry time frame. So we can't draw a level there. So you look left and you say, okay, price, left, and down. And you see this break level. And we see that this level is used up. But the last time, what did it do? Riding like a rocket. So what does that tell you? That there is a great imbalance here, even though this is used up. But this is the 4th time, and the 4th time, yes, and then it's riding like a rocket. So you are not allowed to buy on the daily because it's used up. But now you can drill it down, so you can drill down that area and look for fresh and original levels. I mean, we do not trade in this strategy levels that are non-fresh. So now we add the idea of a third time frame, which is the drilling, the fine-tune level, time frame. The level where we decide if we want to fine-tune that entry or not, because we don't have so much equity, it is too much risk for us, etc., etc., etc. Okay? Hughes asking, no, you take your monthly trend direction for monthly, but now have violated of trend on a daily downtrend with, okay. Do you take these into account when assessing setups? No, I don't. Why? Because we are in a monthly uptrend, and our entry time frame is daily. And this is just a big correction of my monthly trend. If we break our demand area on the monthly, then we are talking about something else. You understand what I mean? But right now, we've got demand removing supply and making higher highs, and supply being violated, being removed. So we are respecting levels of demand, and the impulses are to the upside and the corrections are to the downside, and that means we are in an uptrend. It's pretty logical. There's nothing out of this world, and nothing very complex to understand. Is that okay? Is that okay here? Yep? No. Just want you to be on the same page. Yeah, excellent. Okay, perfect. So, because remember that we are in an uptrend on the monthly, and we are trading the monthly and daily combos. So we have to look for daily areas. Another thing would be that we are doing daily 1 hour combo, and then we would be allowed to sell because the daily trend, okay, the daily has removed this area. Let me draw this. It was the uptrend, the trend line, this valley, and this valley has been broken with precision with one candle underneath. So now it is sell time on the 1 hour. You understood the idea? But now you would be taking the daily as your bigger picture and do it intraday trading based on 1 hour setups. Until where? Until you reach a bigger time frame picture, a bigger picture time frame on another combo, and that will be the weekly or the monthly. So you have to be aware, you should be aware. You don't have to, but you should be aware that we have reached this area. Even though this is a monthly, as you can see, this is also a daily. So this is your daily supply and control. Right here. We agree that this is the daily supply and control or not. Look at the chart. Okay? This is the daily demand and control. This is the daily supply and control. So is price high in the curve or is price low in the curve? Right here. Anybody can ask? Can answer? Yes, you. High. So if we are using the daily 1 hour combo and we see this, we don't have this daily level yet. Until when? Until we remove previous demand area. Okay? We might have tried to buy on a daily weekly combo here and had a loss. Okay? But now we say, okay, now the daily market dynamics have changed. And now we have removed this low. Now the uptrend, this daily, is broken because now we have taken out one area of demand. And when that happens, what price will do normally is to go to the lower daily area and then from there reject again. Normal, unless the trend, there is no level over here. On the higher time frames, this is not the case. We have the monthly, which starts here. So the most likely thing is that price will drop from this higher time frame on the daily to the opposing demand area on the daily. We will travel from the top to the bottom, from daily supply to daily demand. Does that sound logical to you? All of you? Okay. David said, Alfonso, you are very patient. Maybe one day we could have an advanced webinar, or maybe the system is always simple as that. I can tell you, and I think that if you have been trading for some time, you know that is a big truth. A big truth. Very, very big truth. It all depends on how well you are controlling your emotions, after all. The strategies is one word, and there will be 200 strategies that will work. You can look at first factory, a combination of hundreds. But that doesn't mean that you are going to make money. If you don't control your emotions, if you don't have the right rules, you are doomed to failure on any strategy. Any. So, the thing is that this one strategy does not require any kind of indicator, just common sense and logical thoughts. And this is demand, which in fact at the beginning was not a great imbalance over here, not as great as this one. So, but well, it is a daily demand and you have to respect it. Now that the demand is violated, then you are allowed to sell. But sell if this is daily, and we remove this area of demand, and we know that we are too high on the daily. Look at this. We are at the higher areas of this chart on the daily. We are too high. So if we remove this, that means that it is weakness, the strength of the NOK, Norwegian NOK, and it is weak for the dollar. So we have to sell dollars and buy NOKs. So the thing is, we have removed this area of demand, and if demand is the daily time frame is our curve, the one that dictates what we have to do, what am I allowed to do when we have removed this area of demand on a daily, and where I am allowed to do to trade? It's a pretty simple question. We are allowed to sell and fresh supply, but which time frame? 1 hour. That's it. Daily 1 hour combos. So you can switch from the monthly daily. You can switch, you can trade the dailies, or you can say, okay, I will take into account my position combo monthly daily to assess the big picture. And then based on that, I will take 1 hour levels based on my daily. You understood the idea? And you have to be aware of what's going on the bigger time frames. So the thing is that now that this area of demand has been taken out on the daily time frame, it is sell time from here to here. Okay? So we will have to look for areas of supply, fresh and original, on the 1 hour time frame. I don't know if I have history here for the 1 hour, but let's see what happens over here. Let's see. Let me remove this. And let's switch. Yes, I do have. So look at this. We hit that area, we remove that area, now we dropped, and this is the area. We remove this area, like this. Okay? Now we remove this area. Oops. Right. On the daily, and then that 1 hour, we do have this trend now. So we are allowed to sell any level of supply on the 1 hour. That is located underneath this simple downtrend, daily downtrend, on the 1 hour. Okay? I will tell you now, Jan. So the thing is, now we know that this is the daily demand area taken out. We agree with that. This is a white line there, thick white line, daily area taken out. So now we go to the 1 hour. So what happened here? There it is. We go to the 1 hour. And then we don't know yet, okay? We don't know yet that we have the daily taken out. We make the decision right here. Okay? Maybe we wanted to buy. If we were working for some type of confirmation that this area was going to hold the daily, then we will be working on the 1 hour, daily 1 hour combo, and you see that close. Because there was no brand new level of demand. The level of demand was created right underneath, and that was not valid. This trade was not valid because we had already broken the daily demand. So we are in sell mode. So we cannot buy here, even though it works like 1,000 pips, which would be like 100 in this one. Okay. So now that we have broken this daily area of demand, we do have two ticks to connect a trend line, two obvious ticks, and this is a trend line. So this is not a trade because we haven't broken yet this daily demand area. But we do have this trade, and look how this works. Price touches, barely touches, and it drops and drops and drops. So, do we have any entry in this time frame when? And when the daily demand has been broken out, taken out? Yes, we do. Look at this. Here, we have the level. Okay? Okay, bye-bye, Tommy. Have fun. So, since we have, let me do this. Let me remove the automatic indicator. Okay? So otherwise, it will be confusing. Like that. Okay? So, now we must read price. This was a valid level of supply as well. Okay? But price didn't reach that area. If I would have been trading that combination, I don't know, I don't think so, because normally I trade 4 hours and more on this pair, even more. So this would have been a level, and then we did have a confirmation pattern, continuation pattern over here. Yes, Archie mentioned I will publish this later on Facebook. Only people that have attended or from whom I have the email will have access to it, so it will be semi-private and listed on Facebook. So after this area has been violated, okay? Yes, Hugh. So can take 1 hour 60-minute first 60-minute original supply zone after violation of demand. Yes, exactly. So look at this. After demand, okay, you must remember that this is daily demand. I assume that you are following me, and we are going to do this. Okay, that area. We have broken that area of demand. You see? Broken. So, once we are this area broken, what am I allowed to do? I'm allowed to short the market on the first valid area of supply. The first one was this one, over here, level on top of level. We could have taken both of them. This will be this area. I'm sure this will be a 4-hour CP pattern, continuation pattern on the 4-hour. Of course, this is like 3, 4, like two candles there. Yes, you don't need to look at the 4-hour. It's there. So this is 4-hour, as you can see. So this would have been an entry also on the 4-hour, because this is now the weekly and the 4-hour. So we know now that we have broken this, we have created a weekly supply area. Look at this. We have created this weekly supply area, as you can see, we have broken down lower. And now we also have, we'll go back here, we also have a trend now. We are too high on the weekly, and then the weekly 4-hour combo. We have a 4-hour over here, level, a 4-hour over here, another one over here. But we didn't know this was a weekly unless we had history in the past to allow us to make a decision on this area. Okay? So we can sell now because we haven't removed any previous demand areas. And too much trading in the area easily absorbed, which was what happened now. Absorbed. And now, once this area is absorbed, we have here, okay, an area, it's a continuation pattern on the 4-hour. And then we do have another area over here, is on the 1-hour the entry, and then we continue, and we reach this area, we consolidate a little bit, and we reach the monthly, and then we are down. We're out, sorry. So the thing is, let's continue with the. I was trying to show you that the daily, weekly, and monthly curves. You have to decide which one you want to stick to, because of your time schedule, your work, maybe you are working full time, and then you should concentrate on the 4-hour. If you are on holidays, concentrate on the daily or swing. If you want just a paycheck, concentrate on the lower time frames, 1-hour daily. You understood which one you have to choose depending on all your life circumstances you have. Is that clear? Yes? Yeah, time management decisions are all pairs. Yes. So let's make a 5-minute pause, okay? Because it's already 1 hour and 5 minutes. My mouth is a little bit dry. I need to drink some fresh water and all that. So 5 minutes and we are back, okay? See you now. 5 minutes. I was already forgetting. I was forgetting to record this. So we'll recap now and we'll see. Let's finish with this daily 1 hour discussion, this combo. As you can see here, the daily demand area was removed. We'll switch to the daily and you will see removed. So now that we have that area removed, the market dynamics have changed. So what I have to do is to sell on fresh areas of demand, only fresh supply. Fresh area of supply on my empty time frame. Since I'm using the daily 1 hour combo, my daily area is the bigger picture and direction and the curves, and then the 1 hour is my empty time frame where I draw the levels. It is also the area where I manage my trade. Okay? And I will set my take profit there based on the daily curve as well. So that will be another video. So a webinar. This time we'll have this area of strong imbalance that made. This is the point where the big boys decided to go lower in the market. The price didn't return to that area. It did return to the breakout spot over here, to this sort of resistance area, but we do not take our decisions based on that. It didn't return. Don't worry, Francis. You're welcome. So maybe the confusion is that the time hasn't changed here in Spain. So maybe in the States or UK, I don't know, you have changed the date, and now it is 1 hour more still. So that's why, because right now it still is 2 p.m. right here in Spain, and I had planned it for 1 p.m., 1 hour before the market opens for Spain. So sorry for that. Maybe others will have the same problem. So it's difficult when you have people from all over the world. Okay, so we continue. So is this a great level of supply after this demand area, our demand area on the daily has been taken out? Big imbalance, 1, 2, 3 strong candles. So once we have the daily broken, we have to set a limit order right there. Yes or yes. I mean, there's no option. Am I going to place an order up here? No, this is not a great level, and it is higher than that. What makes you think that this area is going to be taken out? I mean, if you are planning a trade up here or up here, you will probably won't get that trade because you are expecting price to go to the top again when you have this great level of supply, this great imbalance. So if you've got a level which is the one that causes the absorption of the daily demand, that's where you have to trade. The short is here, but we miss that short by short. So here we have this, and then we drop lower, and this little level is the level we can take. Why? Because this level is still underneath the trend line, and we have drawn on the 1 hour, and that will tell us, will be like a guide, a mechanical way of filtering out levels. So this level is filtered out already, because in order to reach that area we are here, you would have to break the trend line with at least one full candle, open, close, high and low. So this area is invalidated. So we don't even draw the level because it is not a valid level. You understand what I mean? You follow me? It is not a valid level for several reasons. Too much trading in the area. The trend line would be broken solidly. So for those two reasons, this level is not valid. And look at this. The price dropped, okay, and then candle retested it and then dropped. So there are no sellers over here, I'm sure. Not sure, but most likely. I can't say sure. It's the wrong word. So you follow me until then. So far, so good. Yeah. Conrad saying yes, everybody saying yes. Okay, perfect. So now we have the rule. There is a video talking about. I think it's been removed from YouTube, so I don't think it's available there anymore. Well, you connect two obvious ticks for a trend line, and then this is a trend line. And price is respecting that trend line, as you can see. Okay, it's respecting it. So the thing is that this is a trend line, and all levels are valid. Located underneath that trend line are valid levels of supply on our entry time frame. So this is the first level, the first valid level of supply. Here. Now we continue. We continue going, and then here we've got a level that costs this nothing. And then here we've got another level. Drop, page, drop. And here we missed that entry by nothing. Nothing. Few pips. This is the second one. Is here. Right there. Sorry, I will read it now. I will continue. I don't know what you mean. Before. There's nothing before. This is the first one, and this is the second one. There's nothing before. I mean, this is not a level. This is not a level. I have to draw the trend line because it's not. This swing, you mean, Conrad. This one. Before, this one. This, I don't understand. There are no more swings here. This is one swing, another swing, and there's no more swings. Only this one and this one. You only got ones. So you tell me date, maybe, or hour? Because this is a very common question that many traders have. That's why they say that drawing trend lines is very subjective. It is subjective many times, but not that much. July means here. Okay. This one. This is not about. I mean, this is not. This is the area, the whole swing area. This is yes. I mean, this made a high. This is sorry. I don't know what this is. Okay. This made a high. So now you connect the high. You see the logic, Conrad? In real time, this would be the first point. No, it wouldn't be the first point either. Let me tell you, because this one didn't make a lower low. This one made a lower low, and in order to connect two peaks, we need that the second peak makes a lower low and absorbs previous demand. This one is not valid because of that. You got it? So that one is not valid. And even though you consider this valid, it will be invalidated because later we will have this one which made a lower low. Then this one is not valid because a CP, continuation pattern, are not taken into account in order to draw trend lines. This is not a tick. This is a consolidation area, a small pause in the drop. Okay? In the big drop. So this is a valid trend line so far. So since this is a valid trend line so far, and I repeat, this is just a mechanical way of assessing which levels will be taken, taking into account the daily downtrend that we have now that we have broken this daily demand, as you can see over here. Okay, that demand area, I repeat, has been broken. But if this is a reaction to a previous higher time frame area on the left, which I don't know, we don't have history, maybe you have history on your broker or other platforms like NinjaTrader, TradeStation, I don't know, I don't have on this broker. So I can take a decision based on that. If I had that history, okay, this area of supply could be valid because we will be bouncing off a higher time frame area, but we don't know that. So this CP pattern would not be valid because we were bouncing from higher supply areas. So this wouldn't be a trade. This would be a trade because we were bouncing from here. So let's assume we are bouncing from out there. Okay? So no trade. Here, no trade either because this one didn't make a lower low. So even though this looks like later drop like a rock, this wouldn't be an entry because this level was not a level. This CP pattern, which would be drawn like this. Okay? I will draw it like this. You can draw it like this as well, but normally I will take into account the previous one candle. If it is the high is very close, I will take both. I am really tired of seeing CP patterns do like this, take me out and drop. So this is the way it is. Okay? And do without several picks more. So you adjust your dollar risk, your lots, and that's all. So no entry over here, no entry, no entry, no entry. And now we would have the possibility of drawing this trend line because we have two picks. We agree that we have two picks: rally-based drop, rally-based drop. And then we have a drop, a base, and a drop. So this is a CP pattern, continuation patterns preceded by this V-shape, okay, peak, and this other peak. So now that we have two peaks, we are allowed to connect and draw a descending trend line on the 1 hour, which would be your entry time frame on the daily 1 hour combo. Is that clear so far? I think I'm going very slow, and I think I'm not missing anything. Leo, you are okay with that? Because you are doing the same thing like I do every day with me. So if you think you have any comments, clear. Okay, perfect. So we have two peaks to connect a trend line. Okay? So now we are allowed to sell all levels that we see on the entry time frame, which in this case is a 1 hour. So one rule, and this will be another webinar, okay, because there are so many legal things that we have to cover, but the thing is that they are all logical, like this one. The thing is that the higher we are in the curve, the smaller the imbalance we need. And the lower we are dropping into, we are going into the curve, the bigger the imbalance we will need in order to go short. Because when we are at the top, there will be many times where we'll have consolidation area. Price will be distributing over here. Market makers will be executing or filling all buy orders because they want to buyers in order to sell, and institutions as well. So price will consolidate a little bit over here, maybe for hours or days. It depends on how big the time frame is. And then once all orders, all buyers are being absorbed, then price will drop because there will be no more buyers interested. It is not that there are more sellers in the area. It is that there are no buyers in the area, which is different because they all have been absorbed. Okay? So, yeah, so the number, like Leo says, the number of candles in that top green zone is overcome by the speed of departure. So the departure is really important. But like I said, the higher you are in the curve, the lower the imbalance you need on that area. Because at the top, that is what will happen. So what you want to do is to be as soon as possible at the top, being the first one selling. And then managing your break-even, this will be another webinar, another thing will be covered on the private forum soon. So the thing is that we have to move our stop. If we imagine that we sell here, okay, we decide to short here because it's a hit on a weekly supply area over here, and then price is dropping, and then we short here. We managed to get a retracement into this area. So our stop loss our entry would be here, and our stop loss would be around here, a few pips around here. So what would you do in this case? Well, price will drop, and you should not move. Catch you later, Georgie. We should leave the stop loss alone up here. Maybe close part of a position at 2, 3, 4 to 1, just to lock in some profits, and do not move your stop loss to break even because many times, and I believe it is more than 50% of the times, price will hit the area, it will retest it once or maybe twice, and then it will drop. and you will have a break-even, and after 2 days you will see that the trade has traveled 2,000 pips. In this case, it will be 200 in another pair, not a stocky pair, and you will be like blaming yourself for not having managed your trade correctly. You understood what I mean? That's why we don't need such big imbalances at the tops, at the extremes, and well, when the price is dropping, then we will need it. Yes. The big players are refueling, like you said. So this is the logic. So the trend line is just a mechanical way of filtering out those levels. Of course, it doesn't mean that any legal level that has nothing will be, no imbalance will be a tradable area. You also need to assess how long the level, how much time the level has been in the area, and the departure will be. We've got 1, 2, 3 extended range candles. If we have removed the previous low and all that, so all that needs to be taken into account to validate a level. Okay. So the trade management is definitely a different thing, like you said, a different webinar, because that is the problem with any strategy, and this one is not the exception to the rule. Is not the entries. Anybody can pull the trigger. What is most difficult is exiting the trade, and that makes the difference. If you got a really great success ratio, but you close all your trades at 1-to-1, then another person with an average success ratio like 50, 55 this person will make much more money than you with a 90% success ratio, because he will be managing the trade correctly. We will let the trade run and run and run, while you will get out a 1 or 1.1 to 1 ratio, 1.5. So, since we have broken now the daily demand area, now we are allowed. This is an area of demand. And now, okay, we've got a new high here. So, I will do this. A new low, sorry. More or less. And now, I've got this level. This CP pattern is not good because it didn't break this area. So this is all consolidation. I mean, even though you see this has worked and kept up dropping and all that, I wouldn't trade anything of this because this is nothing. I mean, we have nothing here, nothing at all. So if you were lucky enough to have this trade, then you would be holding the trade, holding, and managing the trade, placing the stop loss. Let me change this to 1 dotted and then 1. So once a new level of supply is formed here, move stop loss to break even, move the stop loss over here, to move stop loss over here, and then you manage the stop loss technically like that. And then you move stop loss, new level, and break lower, okay? I move a stop loss over here. We break lower, then I move stop loss over here. We move lower, then I move stop loss around here. This is the last week low, something like that. And then I manage the trade. And then it dropped like a rock over here, okay? I will manage over here, and then if you leave the trade, the stop loss there, you will be kicked out over there. So that's the way. It will be another webinar, okay? But that will be the logic, okay? So a question by Hero: have you started with Will Bust? No, I haven't started with them. So with Bill Bust here, started the material, recognize how many strategies and your applications. You've got the best of both in your very clear strategies. Thanks. No, I don't know. Will Bust. Yes, Will Baldry. I know who Will Bust is. Yes, I know him. Yeah, I've seen a few videos on YouTube of him, and he's using a very similar thing. Yes. Yeah, I know him. Yes. I don't know him personally. So this okay. So this is the way that we would trade. Okay, we would trade like this. This would be the trend. Wouldn't we agree that this is the trend on the 1 hour? Yes or not? I haven't painted the trend line now. Now we zoom out like this. Okay? Is this the trend on the 1 hour? Yes or no? Pretty clear. So all levels, etc., 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 then we have to check them. But once we get a violation of the trend line, shorts are no longer viable, no longer possible. They are negated. You understood what I mean? We are not allowed to take any shorts anymore because of that. We could switch to buy mode if we have reached a higher time frame demand area. We don't know that yet. Okay, we could have had maybe a trade drop over here. This was an area. This would be an area on the 4 hour, I'm sure. Let me switch to the 4 hour. On the 1 hour was too much. This will be an area on the 4 hour. Yes. So we dropped on the 1 hour, but we are not switching from 1 hour to 4 hours, so that wouldn't be a trade. So the thing is, the only thing that happens here is that look where we are. I'm not going to mix you up with this. You know what this line is? Can anybody tell me what this line stands for? Monthly proximal line. So, am I allowed to sell over here? No, we are not allowed. Even though you see a great departure, look at this departure. Right, great. But look what happens. We not only, let me cover this exactly. We not only close above, but we also, not only close a full candle, okay? But also, we are sort of bouncing from very, very low. We are very low in the curve, so we are not allowed to sell anymore. So the lower in the curve, the more bull traps we get on shorts. That's it here. So this is as simple as that. So we've got that trend, we are not allowed to sell anymore because of that. So if you were not lucky enough to write any of these setups on the way down, okay, on the 1 hour that was really clearly this one. This one we missed it by little. Okay? And up here, if this was a reaction to an area, we could have got nothing else on the 1 hour. Sometimes there will be 7 setups on the way down. Sometimes 1, 2. If you are not lucky, okay, there are 25, 30, 40 pairs you can trade. So I'm sure if you follow the rules, you will get some trades here, some trades there. Okay? Using trail lines will save you from so many losses, Leo says. Okay? I agree with him. You can remove it and not use it and just base your decisions on the imbalances. They will be very, very similar, but having this trail line, what will do this trail line for you? It will give you confidence. Because if the trail line is above your level, then it's like another confluence and telling you, okay, Alfonso, okay, Mark, okay, Leo, you can sell if the level is good. Okay? So this is, the trend is changing. Okay? So do not go short here. You are not allowed to go short there. Even though you see this great imbalance, but we are really close to the monthly. Okay? So that's not allowed. This is why, even though you trade the daily 1 hour combo, you should be aware that you also have a monthly there. Okay? You are too close to the monthly, 5% or something like that. So you, if you were not shorting from up here, do not short down there. You are selling after a strong drop in price, and that's not higher probability, as you know already. Okay? So Jan is saying, so supply level doesn't have to remove previous demand when a higher time frame level is wrong. Exactly. It doesn't have to. You can wait for that to happen. But if the higher time frame is fresh and original, I will just trade all the levels that I see. Okay? Because many times the little small levels will be the ones that will cause the big drop. And you will be thinking, oh, damn it, why didn't I take it? Okay? So right now in real time, okay, the higher time frame good for second forget first levels, little steps. So let's finish this discussion. The monthly, daily, the weekly 4 hour, and daily and the daily 1 hour. So the thing is, monthly 4 hour trend curve, how high, how low we are. The daily 4 hour level, for drawing the levels. Weekly 4 hour curve. I mean, you delete all these lines. So now we saw the daily with the 1 hour. Now let's look at the weekly with the 4 hour. The same thing. Here we've got the weekly area, and here we've got a weekly area within another weekly area, and this weekly area removed this demand area. So why was I waiting for that short to happen? And unluckily, I'm not short there by 50. Why was I looking for that short? Look at the 4 hours. On the weekly, we were doing higher highs. We were in an uptrend. Okay, look at this. On the weekly, we were in an uptrend. Okay. Now we've got a weekly demanding over here. A weekly demanding control. This is a sub area. This is a value drop-based rally and all that. Look at this strong imbalance. It hit the weekly area by the tip and also the daily. And within the daily, there was a 4 hour as well. We saw all that. So you could have taken this trade based on the whole weekly area, on the daily area, drilling it down to the 4 hour. With that fresh area of demand we saw before. See here. Okay, set and forget over here. See, we are in an uptrend. So what are we allowed to do? Buy or sell? On our entry time frame, which is the 4 hours. The same question, same answers. So what we do is we have to buy on 4 hour levels. Okay? So we saw this. Level, no entry, no entry, no entry. This was an entry. Okay? Now the thing is that when price hit this area, we were too low in the curve, so we couldn't sell over here on the 4 hour. But now that price is riding from here, from this area, even though it is retested, we have to wait and all that, unless we had a fresh and original area of demand on our entry time frame. And we did have a fresh. It is not a reaction to a previous level, which was on here, and it was original. It was fresh because, original because it was not a reaction to previous level, and it was fresh because it will look up and right. It was not tested. Okay. So that weekly area, this one has taken out this demand. You are asking that here. If you consider that weekly has taken the prior demand zone. This area taking out this one. Or this area taking out this one. I don't know what you mean exactly. This one significant demand. You mean? No. Can anybody tell me if this is significant demand or not? And for why it would be significant or why it wouldn't be significant? Because this is crucial as well. For an area of demand to be valid, we need 2 legs and a base. This is the first leg, drop, base, and a rally. And the rally has to make a higher high. This area of so-called demand made a higher high and took out previous supply? No, it didn't. So here is has this supply area absorbed previous demand area? No, because this is not a demand area. So it hasn't taken any demand area out. The demand area is this one and hasn't been taken out. So we still are in an uptrend because no demand area on the weekly has been taken out. All demand areas are being respected and all supply areas are being taken out. So now we are in a range, because price is bouncing from supply to demand areas. Okay? It's consolidating in a huge range. So that's it. So first you have to ask your questions, the correct questions, because the right answers will come if you ask the right questions. So if this is the demand now controlling price, because you see this taking candle, incredible, okay? And this is the area of resistance where really this is not supply on the weekly, really. This is just too high. Okay? We are now doing this. Since we are in an uptrend and we are making lower lows, and now we are connecting. Do we have two valid? Yeah, this is not really valid. I mean, because this didn't make a lower low, but approximately something like that. So price is ranging in this triangle. Okay, it is not close to this sort of, I don't know. I'm sure that this will have a name in the pattern. So I don't know the names. I'm just seeing the logic behind it. A pennant. Somebody said a pennant. You said a pennant. So this pennant is being respected. It didn't close below. It didn't close above. So since we now know that we've got a strong imbalance up here on the weekly that took out this low, no demand, but low, made a lower low, okay, now we are too high in the curve, we can sell. If we find a level, a great level of supply, fresh and original with a strong imbalance. Now we drop it really down to the 4 hour, which is our entry time frame because we are trading 4 hour with the weekly. Okay? Weekly is the trend and the curve, and 4 hour is our entry. So take a look at this. We've got this level up here, and we've got this level over here. But I made a mistake over here. These all three candles are part of the base as well, because the basing area is smaller than the whole range. So I should have painted the level like this. But I drill it down to that area. If I had painted that level like that, I would have had this entry. I didn't have that entry by the spread, more or less. By the spread. It's a pity, but it was by the spread. Well, I will consider this level already touched because I did my job incorrectly. Because the level was this one. But that was the area I was waiting to short at. You understand why this is a level which is original, because when we draw a horizontal line above, we look up and left, we'll stop here at the first candle, and there is no level over here. The level is up here. So it is original, it is created out of the blue there, and it caused the absorption of all this demand area. So a strong imbalance. Good for sell and forget, because it is original and fresh, because it is untested. This is the first test. Okay? I didn't take that trade because of that, but well, I'm happy because the rules apply, and it is a valid level. I'm not in, well, I will be in others. Not a problem. Before it was a problem, now it is not. Okay? So this was the level. So now what has happened on the 4 hour? Okay? Look at this. We can draw a trend line. Before we draw a trend line, we couldn't draw a trend line over here because we didn't do that. A CP pattern, okay? So CP pattern, continuation pattern are not valid. This is not an obvious valley. It looks like a valley, but if you take this as a valley, you will take this as a valley as well. A valley is this. See, obvious valley. Very obvious. So since we don't have a valley, we can't do this. This is not possible, because otherwise we will have no trade anywhere. So since we don't have a trend, an obvious valley, we are allowed to buy here, to buy here, and to buy here. And now nothing else, because there is no higher high. Okay? So initially it would be like, it couldn't be like that. It couldn't be like this, okay, because this valley didn't make a higher high. So now that this area has made a higher high, this trend line is possible right here and right there. And what is price doing right now? Where is rejection to? Where is it rejecting to? it is rejecting to this 4-hour trend line. It is retesting this area of demand over here, which is all this area is the city pattern. Right there. Okay? Right there. So this area is being retested. Okay? So, am I allowed to buy here? Yes or no? Easy question. Marty Bay says something, I won't say. No, says no. Leo's no, too close to weekly, no, to handmakers. Everybody, go pill, saying yes. But it is no, go pill. Conrad says yes, no, I'm not allowed to buy. Why am I not allowed to buy? Because look where we are. Look where we are, guys. I mean that now it is a little bit in front. You see, we are too high, and we are bouncing from a fresh and original level of supply within weekly fresh area of demand. Supply, sorry. So what happened the last time, or the first time that price, at the moment when this imbalance was created, it dropped like a rock to the opposing area of demand. So now you are telling me that this demand area is going to break this area? It could happen. Of course, anything can happen, but it is not higher probabilities. And we want to play with, we want to have odds on our side. And this is not higher odds. So this trade is negated. Even though you can see a strong imbalance there, it is negated because of that. As simple as that. So what do we have to do now if we want to sell? Conrad, even though we are in an uptrend with the trend line supporting, it is not allowed. Why? It is another rule, and let me show you something. Okay, let me show you the thread force factor. Okay, because it is all there. Like most things in the private area, but that's something I'm not going to cover here. I'm not doing any kind of publicity. Let me see here. I will bring it up to you. Right here. So this is out there for you to read. And the rules are here very, very, very clear. Okay? Stop sharing. No. Let's see. Okay, here. Using trail lines as direction. These you have to learn by heart. Okay? So, look at this. What does it say there? In bold text. I revised the thread, well, it was long time. This thread I think was a long time ago. It hasn't been revised for some time. I think it was like a week ago I added the combinations, the simpler combinations for time frames. So there it says, trail lines will no longer be valid once a higher time frame has been reached. Okay? So, that rule. What has price done now? Can you tell me? Because it looks like I'm talking to children. I mean, but we have to talk to our stuff like that. To small little children. Activate is, he also says many times throughout the thread, yeah, you have to read the thread, even though it's about 170 pages, I don't know, many pages, you have to read it if you want to understand the rules. And it is always the same thing. I mean, there will be many losses, like in any strategy. But if you come here, if you join this webinar, and you're expecting to have a 90% success ratio, you have come to the wrong place. And if you join our webinars and you're expecting that, you are at the wrong place. Because if somebody tells you that he's going to give you a 90% or 95% accuracy, he's telling you a big lie. I do not believe in that. And I think you've been through that on a few webinars or services, I'm sure. That is not true. So here, since we have hit, okay, Conrad is asking that success hit rate. Mine is about 60, 65. Depends on the month, 55, 65, something like that. Which for me is perfect. I don't want any more. I mean, because if you try to improve that ratio, that will cause more confusion, and you will not pull the trigger as many, and you will miss great imbalances. And Peter said 40 to 50, and good money management will make you money. Leo is saying 50, 60 in equity trading and same in forex. So a minimum 3 to 1. 3 to 1 for making money in forex instead of 2 to 1. 50% ratio, success ratio of 40, 50%, 3 to 1, and you are making money. That's all there is. It's pure mathematics. If you don't believe that, we'll see. So I'm not trying to convince you to use any strategy. I mean, this works for any strategy. So it's just mathematical. It's a math game. Okay? Yeah. Yeah, sure. Felix, I understood, yes. So the thing is, now that we know that price has reached an opposing supply area, what does that trend line? Is that trend line useful or not? Is that trend line valid? Yes or no? Remember the rule. Trend lines will no longer be valid when a higher time frame. This is one of the most important rules. No longer valid. So if it's no longer valid, we can delete it. But we can also use it for a second. We can give it another use. What use do you think that we can give to this trend line, apart from negating now being negated from the higher time frame chart? Conrad said that. Leo as well. Everybody's saying. So this trend line can be used for something like this. Great. If this trend line is solidly broken with a full candle, like for example, let me show you what a full candle is. That is a full candle close. Not only this close, but the whole high, open, close, and low. This, by having this, okay, right here, what we do have here is a mechanical way of telling us that we are in sell mode. We are bouncing from higher time frame supply area on the weekly, which is our curve, and now we are breaking lower. But this area, little area, is being respected. You cannot go long because that would go against the rule because we are too high. Look at what we are. On the weekly, we are 80%. We are not allowed to buy. And we are, not even 80%, but we do have to look at direction. Okay, Hugh. Bye-bye. So now what we have to do is wait for this area to be taken out and this trend line to be solidly broken. And when that happens, this area of supply, this little tiny continuation pattern will be our entry. Okay? You understood the idea? So, let me use this for the first time. So when price does like this, and that does like this, then it will probably do like that. You saw what I painted? It's the first time I use this, so I don't know if this works or not. So, Jack is saying, I think he gets it now. Yeah, shows. Perfect. Thanks. First time I use it. So, is this level a valid supply area? Yes or no? Is it valid or no? People say no, not yet. No, no, no. It is not. Why not? Because it hasn't taken out any previous demand area. So if this area of supply, or not of supply because it is not supply, until it breaks this area. If this area of potential supply, this CP area, is imbalance, takes out this area and closes with a full candle underneath this, then it is sell time. Okay? This is a continuation pattern, not valid counter trend. This is a continuation pattern, too much trading in the area, not a valid area. This is all retested. Retest. So if we break this area, price will possibly, can do anything, possibly do like this. Drop until here. And here I will get out of the trade for sure, because this is right imbalance. So we don't have to be greedy, and that we would place ours, maybe take profit around this area, more or less, and this will be a nice 2,500 pips trade, which is around 250 pips, because this area is got like, this P value is like 1.7. So, but this area could work, of course. It could work and rally higher, but the analysis does not allow you to go along here, because we are 200 meters and all these areas are retested already, and this is too much trade in the area, and this could be a CP pattern against the trend, and CP pattern against the trend like this one. Okay, look what happens to CP patterns when they're against the trend. They are taken out normally. This is a CP pattern, not good because of this wick, but taken out. They are all taken out most of the time. So now we wait for this, and then we wait for a pullback, and then we sell the pullback and hope that the trade will drop and go in our direction. Is that clear? The process? Any doubts about it? So how do you get in short? You have to wait for this area to be taken out and a full candle close, and you sell the pullback. Correct. So now that we have done that, we'll recap and we'll finish with like 2 hours, and I have to do things. So let me see this. So the thing is, we have the monthly as the higher time frame, which is the curve, how high and how low we are, and then the entry time frame and where we manage our trade as well. So now we are bouncing from this area of supply, and it is valid because of that. So what I was going to tell you is that there are 3 types of trade, 3 types of setups. One which is a momentum trade, okay, and let me draw it here. Okay. Momentum trade, type of trade. Okay. Then we have the second, we have a location trade, and then we have the third one, which is the most powerful one, which would be which would be this third one. I think it's obvious, but which would be the best of the third one? Anybody? I mean, I made a mistake here. I want to make it right. Anybody while I'm checking this? Position is the location as well. So, Jan, it's the same thing. Position is location. Okay. The third one would be very specific. Momentum plus location. What I call a sequence. I mean, let me explain you these 3 types of trades, because we have done it without knowing why or how. We have done these 3 types of trades in the whole webinar, while we were doing the webinar. Okay. So this trade on the daily, based on the monthly. What type of trade was this? What type of trade was this? A momentum type of trade, a location type of trade, or momentum plus location? Can anybody tell you? Position, location, number 3 is same, location 3. There's a mixture over here. Okay? So let me ask you. Price hit this area. what is this area? Allocation. Good look. Is this area, is my level of entry level is well located or not? For buying, Nick is saying it is not well located. It is well located. It can be better located than that, Nicky. It is a daily area within a monthly demand area, and look at the daily. Look at the balance. So this area, this trade was a location trade and a momentum trade. Why a momentum trade? Because our monthly was in an uptrend. It was with the momentum of the monthly, with the trend of the monthly, with the trend. So this daily trade here was the most powerful one. It is a momentum type of trade with the location type of trade, both united together in this strong imbalance area. So when price departs from that area in your lower time frame, what you will have? What type of trade would have been this? Would this have been this one and this one and this one, which was a break-even? Which type of trade is that? Is that one? Is it a momentum type of trade, a location type of trade, or both? This one, yes, everybody's saying the same thing. With the trend, momentum. The CP patterns are momentum type of trades. Okay, momentum type of trade. So now let's switch to the daily to see the three type of trades. So this trade on the 4 hour up here on the weekly, which type of trade was that trade? This one. A momentum type of trade, a location type of trade, or both? People saying two location. Let me see. Two was location? Yes. So that's a location because it is well located. Very well located. So even though the 4 hour was in an uptrend, what the 4 hour was doing was having a big correction, and it hit the opposing supply area on the weekly, sorry. And there was a nice level, and we took the trade. Okay? That's the area. And now price is bouncing from that area. So this trade on the 4 hour weekly combination is a counter trend trade on our entry time frame. But why do we take the counter trend trade on 4 hour? Because we are well located and the level is original and fresh. Those are conditions that are mandatory. Original, fresh area supply within a fresh area of supply in a higher time frame. Location. So this area is perfect for a trade, a location trade. Then this area on the daily was trade as a momentum and location trade. Okay? And the ones on the 4 hour in the middle are momentum type of trade. And the momentum type of trade will be negated when we are high in the curve. That is the simple reason why this momentum type of trade is negated, because we have reached the higher time frame supply area, so momentum type of trades are no longer permitted because supply is in control. So this would be the momentum type of trade. Let's do the logic. It's the same logic no matter which chart you are looking at and which pair, equity, instrument, symbol you are looking at. Same thing. It doesn't change. You understood the idea? I think I made it pretty clear. Slowly and very methodical. Any questions about it? So even though you see this level over here, you say, oh, I'm going to buy. You are not allowed to buy on a momentum type of trade when a location type of trade is taking control. You understood what I mean? That's a rule. I mean, that's compulsory. There is no way to break that rule. If you want to break that rule, you are doomed to failure. Just look at the chart. Analyze the charts. Don't be. I always say the same thing in the webinars. Don't believe what I say. Do it yourself. Test it. Take the time, the months to use software like Forest Tester and others that should be out there, and test it and test it and test it. Instead of trying or trading live with your account without knowing what you're doing, spend a few months back testing this strategy or whatever strategy you want to trade. And after that, when you get the confidence, then start a demo account, forward testing, and then when you confirm that you are doing the things correctly, do trade live, but never before. Okay? So this is a momentum type of trade because the 4-hour is in an uptrend. This trend line is telling you that it is in an uptrend, but we have hit an opposing supply area on the weekly. So if, okay, this is always if then scenarios. If a location type of trade is hit on a higher time frame area, a momentum, an opposing momentum type of trade is negated. You understood? That's a very simple statement. Very, very simple. Jack is asking, if we are not so high in the curve, that will be a valid momentum. Yes. Imagine that we haven't hit this area. Okay? We haven't. This was a valid momentum type of trade. It was a break-even because we were very high. This would have been a valid entry. This would have been a valid entry of momentum. But once we are too high in the curve, momentum is no longer possible in that direction. If supply gains control, it takes control, higher time frame, then we are allowed to sell on momentum type of trade in the opposing direction. Okay? Okay, ask Leo, is that a question? If don't forget with original spread zone, you do not need, yes, you do not need a trend line broken of previous, okay, yes, you don't need. If we are setting up forgetting, we don't care about the trend lines and we don't care about anything. We just want to get in the trade. We just want that. Get in the trade as soon as possible. But if you have missed this entry, I have missed this entry, I have a few tips, you know that, all those who follow me, then you have a second opportunity here if price breaks lower and pulls back. That's it. Congrats. All my orders are limit orders. I never place any market execution order. I pre-plan all my trades. I never, ever will press on this button here and do this. Never. Never. That's emotion. If I have missed the trade, I've missed the trade. I used to do that a lot. No, I arrived late on the trade, and then maybe we are here, and then I want to sell, and then price spikes up and out of the trade. But I don't do that anymore. All my trades are limit orders, always. If I haven't pre-planned the trade, if I don't know what the reasons why I'm gonna take that trade, I'm not gonna take that trade. So pressing the new order button here would mean that I haven't made my homework. I haven't pre-planned my trade. So that rule is not, that can't break that rule. It's not on my trading plan. Mark T. Bay say, we've all been there. Yes, actually. I should have got in, but didn't get triggered. Exactly, yes. I think, let me show you, because I think I have this. I think I should have this somewhere. 1 second. I don't know if I deleted the... No, I deleted it. Okay. But the trade was... those are on the forum and all that. We'll know that, yes, it's here. Look at this. Look at this. Okay. I'm using small loss, but this is being cloned to a bigger account. So look at this. My EA was planning to sell 607.34, okay, and it reached the spread. It was the spread. I posted this on my live account and all that. So this is what I was planning to do. but unlikely that doesn't work. Well, doesn't matter. Okay? So, Conrad is saying, if you miss in this sample, we see there engulfing, could have market entered then? Well, if your rules allow you to do that, or if your rules allow you to, if you see a pink candle hitting supply area, which is another strategy is used by many people out there, after the close, you can trade them short, right there. If you see a pink candle hitting an area like this, and this is an engulfing pattern. So, but the lower the rule is, if you short here, your stop loss has to be here. So the lower you enter, the bigger the risk, and the bigger your profit margin. Understood, Conrad? So you have to have rules for that. Because you say, okay, I'm convinced that this is going to drop down because Alfonso said that we are bouncing from here. No, I'm not saying that. I'm saying that this was a valid entry, and now you are late, and you are late. Train departed from the station. So you are not in that train. You have to wait for another train stop. And the next train stop is this one if this area is broken. Only if. That's a condition that has to comply. Okay? So understood, Conrad? Yes? So these are the 3 types of trades, and we have covered all of them. So I think this is a very, very clear webinar. I believe, I hope, that it has cleared many, many of your doubts. Now what you need to do is practice and practice and practice. And not 1 day, 2 days, 2 weeks, or 2 months. More than that, I'm afraid. Nothing on the way. You are not going. I can't change that, and you can't change that. I mean, your brain is like that, and it takes time. That's all. This is not an easy thing to do. But you have to work hard. If you don't work hard, knowledge will not be present in your mind out of the blue tomorrow morning. You have to work really, really hard. And this video, like you said, must view this video a couple of times and more practices. I think this video is key. For me personally, I believe of all the webinars that I've done, maybe it has been like 6 or 7, no more than that, I believe. This is, for me, number 1, because this covers the key of supply and demand. The 3 types of trades, the location trade, based on the higher time frame, the bigger picture, the momentum type of trade, when the bigger picture is in control, and the momentum plus location when there is a big reversion to the mean, retracement, or correction. Okay? Though this is the best one, like this one, because it both together it are 2 types of trades. The momentum will go with the higher time frame, and there is such a big correction, okay, into that higher time frame that we get a strong momentum up. In this case, up because it's monthly demand area. Okay, so I think that's all for today. Hope that you enjoyed it. I will send the link with the videos once I have my lunch and do all those things, converted it and all that, and you will have it on your inbox to watch it as many times as you want. Okay? Okay. Bye-bye. Thanks for being there.